All right, y'all, what's going on here? We're going to get this day kicked off. A lot of shaking and baking here in pre-market. We already had a pump right up to 42.20, which would have put our calls in the money, and then they fell back off, and looks like around R1 here. So the PCE missed across the board, which is obviously bad news, but just in typical fashion. ES pumps. That every single data release we've had since early June has resulted in this action right here, just a big old pump. So why should we respect anything different? All right, 4202 looks like is going to be roughly the open. We do have liquidity up. We have some 4240, 4250, which begins that big ladder all the way up to 4290. That is substantial, and it leaves one to believe that we are going up today. So I'll be looking for calls unless otherwise proven. Wouldn't be surprised to see a morning shakeout back down to maybe pre-market consolidation, which is 4190 and change, and then come up there. I don't really know what I'm going to do with the strangle, so I'd appreciate, just let's be patient and figure out what's going on here. If we do have a huge pop out of the open, obviously I'll try to close the puts and let this thing go. Or if we have a sell-off, I'll try to manage, get some money for the put, see if it's going to bounce back up. Otherwise, it's going to take some managing because we are going to be in a loss, and we'll see what happens. Just bear with me. So 4,200 right now. There is the open right there. We've got a mixed bag across tech stocks. Google's down. Everything else up is green, although not too much. Amazon is slightly red after a big green pop there. They've rotated back down, and here we are right at 4,200. VIX is back down again, 2168, as they are down 0.5%. Bonds today are flat after a lot of volatile action. They're coming back up to pretty much flat. The yields are up green as well after being down as well. So a lot of pushing and pulling across the board. A lot of green, a lot of red, up and down, up and down. So, yeah. We got 4198. YouTube's not working. I got it working. There you go. Try that one out. There we go. All right, so large red off of 42.17 down to 41.96. Liquidity is there's no liquidity at all here, except for the stuff that's way up higher. Small levels, we got 42.10 a little bit, 42.20 and above, but they're not adding anything lower here. So let's see what happens here. Large sell volume on that one candle, big green on Amazon, looking for a move up right now. Probably looking at 42. Man, premiums are juiced. Hold on a second, is that right? 52% IV. Premiums are almost double what they were yesterday. Wow. Wow. So obviously they're expecting a move. That's hard to believe. Wow. All right, so big red candle here off R1 coming on down. So that changes things a little bit. Premiums are double, more than double what they were yesterday. About 110% higher than where they were yesterday, which implies that the market's ready for a big move. So that tells me big money already knows what's about to go down today. They have that speech in hand, I guarantee, down to the periods and the exclamation marks, and they're gonna position ourselves accordingly here. So UK is down 0.19. German markets are down 0.2. Asian markets are mixed. ES is right back down to S1. There we go. All right. Let's see what happens right here. So there's a first green off of S1. Amazon had a large green candle. They sold that back off, but they're trying to rebuild. XLF is up 0.26. They are the most green sector of the day. XLE was down, but having some green coming back up. And ES is bouncing off S1. Does the pricing action premiums go off indication market's directional move? When I see IV pop this much, all I'm looking for is a big move. All I'm looking for is a move. Now I'm going to go in here and try to figure out what the deltas are talking about, what they're looking for. But Yeah. From a charting perspective, I say down. But from the data perspective, when it looks like, especially Bookmap, there is argument to go back up here. So 4,200, this 4,200 level is going to be the line in the sand. We talked about the entire week. As long as we remain in this consolidation zone, I remain neutral. And if we can take out 4,200 in rally, I will be bullish. And then if we could fall back down and take out 4097 ish, I'll be bearish. I would be very surprised to see 4094 taken out today. That's 106 points down. And it does look like that we are inclined to take out the upper half. However, we know how quickly things can change. So I'm not going to front run anything. I'm going to take a look at those two levels and let the data tell me what to do and go from there. But right now, yeah, definitely premiums are incredibly jacked at the moment. More, right now double what they were yesterday. So bounce off S1 here, off of the 50 simple moving average. And we're just chopping between S1 and R3 at the moment. We've got liquidity up to 42.35. I'm looking at 42.10 calls, which are 10 up, and 41.90 puts, which are 10 down. Deltas on those respectively. 0.43 and 0.46. So probability tips its hat to the calls, and IV is 52%, which is double what we usually expect here on this particular setup. We do have 30 minutes or 25 minutes now until Jay Powell is scheduled to speak, and we will be tracking that. The flow is slightly positive, not too far from neutral, but positive. So yeah, the strangle is barely down, honestly. It's not down that much, all things considered, because of the premiums jacked 100%. So I'm cool. I'm cool holding. 10%, 15% loss is no big deal for me. I'm just waiting to see if we make a move. Obviously, the huge IV worked in our favor. It worked in our favor. We opened dead flat, and our strangles should be down 60%, but they're only down 10 or 15%. I'm cool with that. That's correct here for the bank. I can't say that. Yeah, so we do have liquidity much higher. We have a large ladder from 42.35 all the way up to 42.80. It was put on Monday. It was taken off. It was put back on again yesterday morning, and it doubled in range. They doubled the size of that range, and they're still on there today. They put on and they never took it off. So if every time they put on this ladder between January and June, well, I should say March, because I didn't start using Bookmap heavily until March. From March until June, every time they put on this ladder to the downside as we were selling off, it played out 100% of the time. Every time we had a ladder, we went down to it. So we'll see what happens. This is the first time I've seen a strangle of this size above us. So we'll see if it works the same way or if it plays as accurately. Close the strangle for a small loss. Didn't want to mess with it. I don't blame you. I don't blame you. I won't hold it too much. I'll probably hold it into Jay Powell's speech, which is in 20 minutes, and then after that, I'll give it the old boot. I'll go give it the old boot. I didn't expect such a gigantic pop in IV. I was expecting some increase just because Jay Powell is talking, but to see a doubling of the premiums is oddly unsettling. So, which makes me think that we are going to have a large move later this afternoon. It's like they know something. I'm telling you, someone always knows, and when you cannot ignore the data that we see, when premiums do this, that's the market saying, "Hey, jabroni, there's about to be a move made." Not yet. I don't have any idea yet. We're holding S1. We rejected R3. Came on down. We're holding S1 here. Everything else is pretty much flat. And honestly, we'll probably remain in this range plus or minus 10 until he starts talking, which is in 20 minutes. So we will see. We will see. What do you see in terms of liquidity? Right now, I see nothing except 42.20 and above. We have some light onesies and twosies down here. There's nothing being added below. There's a very, very small appetite for liquidity below, except for the big levels, which are always here at 4,100. And then we've got all liquidity above 42.10, 42.20, 42.30, and above. So major liquidity above, very, very light liquidity below, which leads me to believe we're going up. However, when J. Powell starts talking, all that can change, and they'll probably will wipe most liquidity on right before he starts talking. I would say 4 to 5, 6 minutes before he starts yapping, flapping them lips, I will see a wipe of liquidity. Now, I'll be looking for the ladder up above to see if they wipe that. If they wipe that ladder, then it's, dealer's choice, man. Dealer's choice. Where do you find to look out? There are two places that I check on the frequent, and that's one, investing.com//economic calendar, and two, the Federal Reserve calendar. You have to pay close attention to the Federal Reserve client calendar, which is on the federalreserve.gov website, because that's going to tell you anytime they start bumping gums, you need to pay attention to that. That's your market awareness. Part of your market awareness is not just monitoring the charts, it's monitoring J. Powell until otherwise noted in 24 when he goes away. And then we'll be doing, I guess, Janet Reno ×2 or something like that. Janet Reno's dance party. I just want to dance. What do you look for? What do you look to find out about market cap such as J? Oh, I already answered that one. Yeah. Yep, you can do that too. You can do that too. I think entering a strangle now would be dangerous since we're likely to lose IV. Potentially. It depends on how big the move we get, but yes, probably. Amazon's going back up to highs. Microsoft is. Google's down. XLF is up, but trying to come back down. And keep a close eye on the bonds and the yields too as we go into this event. Everything is kind of chopping around here. Y'all remember that SNL skit with Janet Reno? There you go. Beautiful. Beautiful. If I'm holding a CCS at 42.85, what do you think it's a good idea to close it? Ooh. I mean, you're still 90 points out, I don't know if that's going to be touched, but honestly, it all depends on what he says, If this is the same FOMC type of volatility event, I mean, that could come into play. I've seen 110-point ranges before on FOMC days. So just have a plan. Exactly what Viper said. By the way, speaking of Viper, I watched Top Gun Maverick last night in my home theater. Freaking beautiful. But either way, have a plan. Have a plan with that as call credit spread. You definitely gave yourself a wide berth, which is good, but be prepared to long some delta going into the event if things start spiking. Why did I do a strangle yesterday and not today? Because I was looking for a larger move with PCE. So, well, we won't get into the movie now. I'm going to position self, but we'll talk about it later. But yeah, it was great. It was great. Long calls. Long calls. So what I'd be looking to do is you want to take a call that is cheap for me, but still a higher delta relative to your short spread that's a similar strike. So if you do make a move up to your short leg and that call credit spread gets blown out, you're still going to be making more money on the long call than you are losing on the short call. As a hedge, for example. So, for example, your short leg is 42.85. I would long some calls that are just below that, 42.75. if we start making the crazy move. Or you can come a little closer to the money and just ride those up, whichever. But, you know, me personally, I want to try to have a 1-for-1 match when things start looking crazy. Obviously, you don't want to be too aggressive on a hedge on a 90-point out call credit spread until we really start focusing on, hey, this thing is about to jump on a rocket and go to the moon. But if I'm looking to get long during Powell's speech, what type of confirmation to look for? During his speech, I mean, if this is the same type of FOMC volatility, it's going to happen very quickly, and you're going to see it. And the only thing I really look for is, one, the first candle usually is the fake out candle, because that's the stop loss. They kind of flush the market, and then they flip it. They pull the Missy Elliott move on you. So, you know, big green, top wicket, reverse it back down, or the other way around. They send a big red bottom wicket and then fly it up. So all I'm telling you is don't try to pin the top of the bottom. Don't try to catch the first move, because usually if we get a big move, there's plenty of move to be had. You know, it's like going to the best buffet in the world that's, you know, got all the foods you want, and on the very first entree you come to in the buffet, you load your entire plate up with there's not enough room left. So there's a whole bunch of buffet, there's a whole bunch of move. Just get a little bit here, a little bit here, a little bit here, and then you've got the whole thing going. So don't try to catch the first move. Wait for the move to be made. There's plenty to be had. Mac and cheese and jello. What are you, 7? Want to watch Rugrats too? Patience, yeah. I will hope I do, Jake. I hope I do. All right, so right here, 41.96 on S1. I love Trader Jay. He's a good dude. Dill, I don't know what dill is, but. All right, so we are consolidating here just over S1. Yes, a firm Neo, and then of course I'll be managing. So what I want to do before I even start managing the strangle after he starts talking is I want to put on a directional play. So I'll worry about entering a directional play, and then that'll buy me some time against the strangle, and then I'll manage whatever losing leg of the strangle is, and that's what I'll do. How wide is too wide? I would say 4 points or above is a pretty aggressive strangle. Today may be a good day to do it, though, because on a volatility event such as this, you want to be a little more aggressive because there's going to be a larger move. If there's no volatility, then playing a large range is a little more risky. So, hey, they got an iceberg up there just floating at 42.17. Watch that baby. Man, everything is pointing to up. I'm very curious to where this is going. This is like Super Bowl. XLF is running back over. Yeah, but Zan, I have no idea where this thing's going. You know, they could move this thing anywhere we want. I have no idea. So every single time we've had an FOMC or CPI in the past couple months, it's raged up. So let's take a look here at Hero, which is positive. The flow is positive. I just read a tweet that says the stock market is not a casino. The casino gives me a drink when I lose money. I love it. All right, hanging here, S1. Silly question perhaps, but are you on the look for plays today apart from money? Yeah, absolutely. So yeah, what I said earlier, like right here, my first priority is to get into a directional play, and then my second priority is manage the strangle. Once I am in a play, whether it be call or put, up or down, I don't care. Then I'll worry about managing the strangle. My first goal is to make money. My second goal, manage the losing position. Because making money, in and of itself, will manage the losing position. Because if I've got 15 trades going on, all I care about is that bottom number, that P&L number. So there you go. I know you're managing a strangle, but what do you think you'll be taking the positions? Yeah, so right now, I'll be taking a look at probably, I'm going to move my strikes up to plus 20 minus 20 because this movement's going to be pretty aggressive. We'll probably see some larger candles when he starts talking, which if I'm looking at plus 10, will automatically be at the money when I try to take it. So I'll probably be looking at, from here, 42.10, 41.70, somewhere in there. I don't know. It doesn't have to be accurate. Just throw down, just put some risk on. Well, they better send me a huge freaking gift basket, Major Tom. All right, breaking down through S1 here. What do we got on the dollar today? What is the dollar doing? Big old drop in the dollar. Coming off of 52-week highs. Beautiful, beautiful action here. Coming on down, 41.88. Premium still holding good. I'm within my acceptable loss limit for my strangle so far. I hope this thing tanks into the ground. Let's go. What the crap is that? Uptrend, downtrend. Oh, okay. Interesting. The speech is in 9 minutes, 10 o'clock Eastern time. So y'all be ready. Y'all be ready. NCLH, baby. Every time I see that, I get warm and fuzzy. NCLH. NCLH treated me very well. I got so much hate for that. That's what I'm thinking. That's what I'm thinking. So here's what I'm going to do. I'm going to go over to the Fed Reserve. I still think everything he's going to say is going to lead to bullish activity just because... What? Hold on a second. That just linked me to the Arkansas Women's Commission. Why did that link there? Hold on a second. I'm going to look this up. All right. Calendar. August 26th. Economic Outlook. Watch live. Click. Go. All right. That's what I'm looking for. All right. Jackson's Hole Symposium opening remarks. The stream will begin shortly. That was weird. No, I clicked on it. I clicked on it from the Federal Reserve website and it brought me to the Arkansas Women's Commission. Like, that's weird. All right, there's the link I'm looking at right there. Opening remarks. And if y'all are looking for it here, there you go. All right, so 10 a.m. and then after that, there's nothing else scheduled. So tomorrow, no, it's not tomorrow. It's Monday. We have Brainerd speaking, but it's a pre-recorded video, so that's probably not going to be anything. So. Fed speaks in 5 minutes. 5 minutes. You said there are signs pointing up. Obviously, that can change last second, but what makes you think that? Right now, I am monitoring just the daily chart for the now, and then I've got, of course, Bookmap, which is providing all liquidity higher. There's nothing lower. In fact, they're removing lower and they're putting on higher. And plus, we have this monstrosity right here. So we'll see what happens. Obviously, yes, they can wipe this, and they will wipe this right before, and we'll do it. In fact, they're already starting to take liquidity off, but we'll see what happens. You know, could be. It could be. What's up, Dylan? How you doing? And then, of course, we have got midterms coming up, and you know, they're going to do everything they can to try to maintain control of their administration. I don't think it's any. I don't want to bring this up; it'll cause a conversation. But yeah, anyway, you know, they're not going to be too aggressive on anything to tank this market right before midterms. So. 4,200. What's up, Mike's Deals? I got a big weekend plan. I do. I got a big old D6 Dozier coming out to the property. It's gonna be fun. Yeah. Yeah. Liquidity's wiped. Oh, he's going. I'm waiting with the dude, new guy. Yes, lurking Larry. I'm looking at taking calls and or puts. So my first objective is to get into a directional play, and then I'll be going to switch over to manage the strangle. So before we start asking a billion times, are you closing the strangle? Let me get into a position first, and then I'll worry about managing that baby. And then, of course, position sizing. You know, I'm going to pound on that table again. Position sizing. Yep. All right, 2 minutes here. Please take your seats. Take your seats. They're about to start doing their thing. About to start talking, so let's reel in the chatter. Now remember, when things get crazy, let's try to keep the messages in the trading floor to essential messages while things are going nuts. Otherwise, I'll have to put a 5-second slowdown mode. Yeah, you're probably right. All right, here we go. Let's see what he's going to say. They disabled the chat for this live stream.
Welcome everyone to the first session of the 2022 Jackson Hole Economic Symposium. Chair Powell, the floor is yours. Please come to the podium. Thank you. Good morning, everyone. Esther, thank you very much for the opportunity to speak here today.
They were clapping for him, sorry.
In past Jackson Hole conferences, I have discussed broad topics such as
All right, Powell's
the
talking.
changing structure of the economy and the challenges of conducting monetary policy under high uncertainty. Today, my remarks will be shorter, my focus narrower, and my message more direct.
Uh-oh. Uh-oh. More direct.
The Federal Open Market Committee's overarching focus right now is to bring inflation back down to
Oh, man, this thing's going to tank.
price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy.
He looks like he's regretting what he's about to say.
Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The burdens of high inflation fall heaviest on those who are least able to bear them. Restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Reducing inflation is likely to require a sustained period of below-trend growth. Moreover, there will very likely be some softening of labor market conditions. While higher interest rates, slower growth, and softer labor market conditions
I'm about to throw down some.
bring
Look at this.
they will also bring some
Come on,
pain
baby.
to households.
Come on, baby.
These are the unfortunate costs of reducing inflation. But a failure to restore price stability would mean far greater pain. The U.S. economy is clearly
4170 puts.
from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. While the latest economic data have been mixed, in my view, our economy continues to show strong
Hi, Spider-Man.
underlying momentum. The labor market is particularly strong, but it is clearly out of balance, with demand for workers substantially exceeding the supply of available workers. Inflation is running well above 2%, and high inflation has continued to spread.
I'm not in him. I'm just looking at him.
While the lower inflation readings for July are certainly welcome, a single month's improvement falls far short of what the committee will need to see before we are confident that inflation is moving down. So, we are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. At our most recent meeting in July, the FOMC raised the target range for the federal funds rate to 2.25% to 2.5%, which is in the summary of economic projections range of estimates where the
Booyah.
federal funds rate is projected to settle in the longer run. In current circumstances, with inflation running far above 2% and the labor market extremely tight, estimates of longer run neutral are not a place to pause or stop. July's increase in the target range was the second 75 basis point increase in as many meetings, and I said then that another unusually large increase could be appropriate at our next meeting. We are now about halfway through the intermeeting period.
Beautiful. Beautiful.
The decision at this September meeting will depend on the totality of the incoming data and the evolving outlook. At some point, as the stance of monetary policy tightens further, it likely will become appropriate to slow the pace of increases. Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. Committee participants' most recent individual projections from the June SEP show the median federal funds rate running slightly below 4% through the end of 2023. Participants will update their
Man, Amazon got
projections
crushed.
at the September meeting. Our monetary policy deliberations and decisions build on what we
Man, there's so much data right now.
both from the high and volatile inflation of the 1970s and 1980s, and from the low and stable inflation of the last quarter century. And in particular, we're drawing on three important lessons that I'll highlight. The first lesson is that central banks can and should take responsibility for delivering low and stable inflation. It may seem strange now that central bank
All right, watch this first candle.
on these two fronts. But as former Chairman Ben Bernanke has shown, both propositions were widely questioned during the Great Inflation period. Today, we regard these questions as settled. Our responsibility to deliver price stability is unconditional. It is
Look at
true
this move.
that the current high inflation is a global phenomenon, and that many economies around the
XLF
world
is
face
tanking.
inflation
Dollar's
rates
rocketing.
at or higher than seen here in the United States. It's also true, in my view, that the current high inflation in the United States is the product of strong demand and constrained supply, and that the Fed's
Booyah.
tools work principally on aggregate demand. None of this diminishes the Federal
I'm
Reserve's
doing a quick banana
responsibility
scalp
to
on
guide policy
4160s right now to add.
price stability. There is clearly a job to do in moderating demand to better
Just a
align
quick
supply
scalp to take advantage of
with
this
the
bottom
economic
candle.
picture.
So don't enter.
The second lesson is that the public's expectations about future inflation can play an important role in setting the path of inflation over time.
God, look at that. 4161.
Many
Wow.
polling measures, longer-term inflation expectations appear to remain well anchored. That is broadly true of surveys of households,
What do we got?
businesses,
What do we
and
got?
families, and of market-based measures as well. But that is
So
not
our
enough to
strangle
hold
is
us
doing
to
very well.
with inflation having run well above our goal
Bam.
for some time. If the public expects that inflation will remain low and stable over time,
Yep.
as
IV's coming off just a little bit.
and it likely will.
Where's that at?
Unfortunately, the same is true of
Right
expectations
off
about
S5.
volatile inflation.
I
During the
have an
Great
S6
Recession
calculator
of
if we need it,
1929,
so don't worry.
anticipation of high inflation became entrenched in the economic decision-making of businesses and households. The more inflation rose, the more people came to expect it to remain high, and they built that belief into wage and price decisions. As former Chairman Paul Volcker put it at the height of the Great Inflation in 1979, inflation feeds in part on itself, so part of the job of returning to a more stable and productive environment is to greatly reduce inflationary
Yeah,
expectations.
he is. Yeah.
One useful insight into how actual inflation may affect expectations about its future path is based in the concept of rational inattention. When inflation is persistently high,
4170.
households and businesses must pay close attention and incorporate inflation into their economic decisions. When
Man,
inflation
look at all the
falls,
crap that
they
just came out on Bookmap
focus
too.
their attention elsewhere. Former Chairman Alan Greenspan put it this way: for all
Wow.
practical purposes, price stability means that expected changes in the average price level are small enough and gradual enough that they do not materially enter business and household financial decisions. Of course, inflation has just about everyone's attention right now, which highlights a particular risk today. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. And that brings me to the third lesson, which is that we must keep at it until the job is done. History shows that the employment costs of bringing down inflation are likely to increase with time as high inflation becomes more entrenched in wage and price setting. The successful Volcker disinflation of the early 1980s followed multiple failed attempts to lower inflation over the previous 15 years.
Right to S3.
A lengthy period of very restrictive
All right,
monetary policy
4180
drove
calls and
inflation into
potentially
sky
might
high
take here if we go higher than S3.
to start the process of getting
See
inflation
if this is
down
more than
to
profit
more
taking or
stable
if we're
levels
gonna
over the
bounce
middle
off this and go
of the
down.
spring of last year. Our aim is to avoid that outcome by acting with resolve now. So, these lessons are guiding us as we use our tools to bring inflation down. We are taking forceful and rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation expectations anchored. We will keep at it until we're confident the job's done. Thank you.
Wow. That's as hawkish as he's been in a long time. In a long time.
Thank you, Chairman Powell. Our first session of the day is reassessing economic constraints, maximum employment. We'll hear first from Nicola Fuchs at Swindon.
All right. Muted it looks like. Okay. So that was it. That's his that's as hawkish as he's been in a while. Obviously the market responded with a 44-point drop. A big old candle right there. So all the way down. All the way down. Little bottom wick off of S5 and coming back up. Look, big volatility right there. Big volatility right there. So, yeah, now we're back up. Scalp those 4180 calls right there. Holy crap-a-roni. Look at that. 41.9. All the way back up to the top. Look at that. Look at that. Wow. Wow. 41.95. Incredible, incredible volatility. So, all right, so I held on to the strangle, which was doing great. Now, not so much. I scalped a quick 41.60 put for nothing, and then I'm scalping this 41.80, which is insane at the moment. Like, this is ridiculous. That's a 50-point bounce off the bottom. Holy crap. Holy crap. That's the most ridiculous thing I've ever seen. That's the most ridiculous thing I've ever seen. 74% right there on a half a candle. Gah. Sold puts at the bottom. Nicely done, Ron. Wow. Wow. All right. 53%, 51%. Right back up through S1. That was a 50-point move on 2 candles. I'm going to go ahead and scale out. That's the largest non-scale out run I've had in about 2 weeks. That's ridiculous. Still holding the strangle, though. All right, 27.60. And now we chop. Yeah, probably. Nicely done, heavy metal. 130%. Awesome stuff. Awesome stuff. Well done. Yeah, when I saw that big old bottom wick off of S5, I switched over to calls, and I brought up 4180. So that bottom wick under that kind of volume, selling volume, you got to look for a bounce there. That's just crazy. So, looking at the liquidity, we've got liquidity still. That everything has been wiped except for everything up to the north. So we've got 42.25, and we've got that ladder. We got that ladder. Wow. Nice hot wing party. Man, y'all are killing it today. Awesome stuff. I didn't expect that much volatility. I'm not going to lie. 50 points down, 50 points back up. I didn't expect that much. That was crazy. But I'll take it. I'll take it. I'll take it. Oh, man. All right, so the strangle went down to 13 bucks. It was break even. I don't think it ever actually got profitable. Got down to 13 bucks. So we've got the 4180 calls that I'm still holding. I've scaled out the first scale at 26 and change, and then I'm still holding the remainder of that position there, now priced at $25. If we can bounce back up and go to today's highs, these will probably be a pretty significant win, and it'll make me net profitable on the day, which will allow me a lot more breathing room for the strangle. And hopefully, if this thing rallies to 42.20 and up, I can manage that the call. Nice, Steven. 160%. Y'all killing it, man. Killing it. Very interesting, man. It's like you could tell his mood was different when he came out. When he came out on that podium, you could tell that he was a little bit more cautious than usually. And look what happened. 50-point sell-off. That's all right, Stance. Like that's a difficult situation to play. So, not that I know of. Not that I know of. No, we already have PCE, and then we've got Powell just talking. Other than that, there's nothing else scheduled for the Federal Reserve unless they release some comments about the symposium, which is possible. I don't see anything else. So, We had a 50-point sell-off, 50-point buy-up, and now we're right back up to the pre-market. So I don't want to get smoked with premium decay. So I'm going to give this strangle till probably 10:30, and if we don't make a move, I'll just go ahead and close that baby out, and I'll monitor the remaining calls that I'm holding. So, Baby Yoda. I like it. I like it. He was not bullish. He was quite bearish, or hawkish, I should say. So I'm surprised to see such a huge jump. I was looking for it though after that huge bottom wick on such strong volume off S5. But here we are, right back to even. Right back to even. Yeah, there you go, Sil. If I'm being honest, I completely missed the VIX part of that, but I caught everything else. And up we go. What did the IV fall down to? IV fell to, what are we currently at? 51%, or 41%, I'm sorry. We were 52 before. We're at 41 now, so we're off about 11 points. So yeah, here we are, 41.87. You have to adjust your settings for it to see the data you want to see. He really didn't say anything that was significant. Is that why we bounced? I guess. Your guess is as good as mine. But, he said that the labor market was not where they wanted it to be, and employment is not good, and they're going to have to, keep focusing on their policy. I never understood why hawkish is bearish and dovish is bullish. Do you think the hawks fall high and dovish? Yeah. Well, the hawkish and the reason why they use hawkish and dovish instead of bearish and bullish because it refers to their policy. Hawkish is more restrictive, dovish is less restrictive, and that's why they use those words. I guess hawkish is more aggressive, like they dive at, and eat. I don't know. Doves are like, hey, just look at me, I'm a dove, coo, coo, whatever. But man, Mariah's killing it. 6 for 6. I don't know what doves are, but they're delicious. I love dove hunting. It's one of my favorite. Made 53% on a call. Nice, Kennedy. Absolutely. Yep, position sizing is most important. Most important. Yeah, but we're chopping, these are 10-point candles. So this is not normal chop yet. Volatility is still here. It's just sideways, and these are 10-point candles. So we'll see if this drains off and what happens when it does drain off. And we still have liquidity higher. I'm currently holding the strangle and 4180 calls. My entry on the call was 1770. My first exit was 2690, and now I'm holding a remainder of the 4180 calls. So I scalped a quick 4160 put for pretty much break even. And now I'm trying to manage the strangle and then manage the rest of these 4180 calls. I got a much later entry than Trader J, so I hope you all followed him. I think he pretty much bottom wicked that thing. But Tesla's going up. Amazon's back up. XLF is coming back up. Strangle's down about 50%, yeah, right now. And we bounced right off S5. So I'll go ahead and tell y'all there's going to be a bit of a transition period between my position sizing in the upcoming weeks because I'm transferring most of my trading liquidity into a single IBKR day trading account. So once that happens, there's going to be a transition period where my position sizing will be quite small. So and I'll let y'all know when that happens, so you know the risk I'm taking. But join the gang, yeah. Nice, Damien, 39%. I've had it up to here with E-Trade. I guess you can't see me, but I'm holding my hand up high. And I'll be making the full transition over to IBKR. I'll still be leaving some funds in E-Trade. It'll be a small amount, but yeah. I've always traded on IBKR and E-Trade, balancing both, doing the longer term stuff on E-Trade. I'm sorry, on IBKR and doing long options on E-Trade. But I've become so comfortable with IBKR, and I like the customability of it that I'm just going to make the full transfer. I'm trying to time it out where I don't think there's going to be a big move while I do that because I don't want to miss an opportunity. But all right, red off of S1. Yeah, it was driving me nuts, man. Driving me nuts. And the few times I've had to deal with them, they've been okay. I've heard some bad stories about it, but they've been fine for me. I'll make a video. I mean, yeah, I posted a screenshot of this setup, and I'll be happy to do it. But, you know, it won't be that in depth. Mine's pretty simple. All right, we're coming back down to break even on the remainder of these calls after getting pretty dang good first release, but no. 41.77. These are 30-point moves right here, man. Dang, look at that. Boom. Down to S3. Well, how it does it S3. Particularly like to see if our setup is different from options to futures and IBKR. Yeah. All right, I closed out the 4180s. Now I'm just holding the strangle. I'm a major South Park fan. I used to be, not anymore. Man, that right there is almost a 30-point drop. S4. Man, it's super volatile morning. I love it. I love it. Nice kill. 18% on that drop. Love it. Yeah, if you are playing zero DTE options right now, these moves are big enough where if you're wrong, I know we're used to this chop we've been having the past 3 days, but if you are wrong, your position's going to go down big time. I just watched my premiums go from $27 to $15 in 2 candles. So I took a nice win on the first half and a loss on the second half for a net profitable position, but still, you got to be quick on these exits. 41.69 coming back down. We're 8 points off from in the money on the strangle. Nice GT3. Well done. Man, if you're holding an iron condor right now, your blood pressure's probably all over the place. Apologize now, but I won't leave. Picking my mom from the airport this morning and going with to be my dad. Oh man, well, I'm sorry for the anniversary, but we'll miss you. Am I looking for another call entry? Maybe at S5. I need to see the volume or in the price action. Obviously, if I see what I saw the first time, yes, I will bottom wick this thing with calls, but this is some pretty heavy action. And after they sold off the initial, there's one or two things that's going to happen right now. With this big sell-off, this is a 50-point range. So this is not a normal range day. This is a 50-point range. So with this much selling pressure, we sold off the initial candle. We bounced back up aggressively. We're promptly selling that back off. If we're either going to 4,100 and this thing's going to blow through, or we're going to bounce back up and go to highs. But this is some pretty crazy volatility. Pretty crazy volatility. And hopefully we can go in the money so our strangles will eat. Liquidity is all above right now, but however, they are adding some liquidity lower now. We do have an appetite for 41.50 now. It's the first time they've really pegged 41.50, and now we're going down to 41.40, even in 41.15. Man, look at this, coming back down to lows. Beautiful. Yeah, exactly, Trend Trader 0007. No. Greatest game in the world, GoldenEye. Nintendo 64. Millennials unite. All right, we've got XLF just put in new lows. Absolutely destroyed the financial market. We've got S5 coming down. Looking at, man, I am clicking all over the place. Look at this move. 41.50 puts if we go lower. Wow. Gah! Look at that move. Strangles are back to break even, just about. 41.50s. This thing's going down, man. This thing is going down. Looking at 41.50 puts. We're now through S5. This range is so big, I don't even know how to calculate. I've got an S6 calculated. Hold on a second. I can't even keep up with all this. This is 414.34. If they take out, oh man, they're adding liquidity even lower. They're adding liquidity lower. The news was bad. Like, he came out and said nothing, and he was very hawkish on his speech, which is something that's out of character for him. So maybe he's preparing us for CPI this month or in September. First bounce. Nice, Neon. I know there's a lot of people posting substantial wins, but I'm not personally. I'm not. I have not entered a trade yet after the initial call that I took this morning. So, but I'm waiting. I know a lot of people are posting big wins, but remember, if you are in a losing trade right now, this is difficult stuff to trade. But there's always going to be someone making money when there's a big move. So don't get FOMO, and don't act like don't think that you're the only one losing money because this is incredibly volatile stuff right now. Remember, anytime there's a move made, there's always going to be a winner and there's always going to be a loser. And those people winning are obviously going to post their winning plays. And I want you to. I want you to post your winning plays. All right. Blasted lower right there, baby. All right, banana trade, 41.50s. Very, very, very cautious trade, but that top wick right there. Look at that right there. Booyah. Who is calling me on Discord right now? All right, I'm already scaling. God, look at this crazy volatility. This is nuts, dude. Wow, look at this. Holy smokeronies, y'all. 20 bucks, 20.30. I'm taking my first scale at 20, 20.50, 20.70, now 21. I feel like that scene in Blow where he's testing the purity of the cocaine. 41.42. I have a lot of movie references. Coming on down. Still holding. I scaled out my first at 21.80. Coming on down. Gah. Our strangles are just at break even. Where are we at now? No, they're super profitable. Look at that. 30 bucks. Gah. And that's what I'm talking about, baby. Oh, I love green days. $25. Everything. My P&L just went nuts right now on this put. Just went nuts. Nice blue screen. All right, $24. I need 32 and change to be 100%. Let's go, baby. That strangle, man, just put me over the edge. Microsoft is tanking. Google is tanking. And we going down. Hold on, I got people trying to be inappropriate in the channel. 22. I'm going to scale out another one. I don't like that bottom wick. Let's see if I can get a fill at 22 for the remainders. These positions are deeply in the money right now, so I'm going to look down and go to 41.20s. I may throw down a 41.20 YOLO to see if that baby gets filled. We'll see. 192% nice, Raj. Holy crap-aronis. Gah. All right, what's the strangle doing to us right now? Let's flip over. $26 and going. Coming on down. Your stomach can't take anymore. God, this thing is still dropping. $22. Look at that. Look at that sell volume, y'all. Look at that sell volume. What's my macro doing? Whew, still have a bit. Wow. Remember what I said? 40.94, which it looks a lot closer than it was this morning. We take out that level, we gone. We gone. Nice GT3, 50%. Man, we all eating today. 41, 40, 50 breakout lows. What we got? XLF is dropping. Microsoft is dropping. I don't have an S6 and X7. I haven't had a chance to calculate because I've got positions I'm managing right here. What are the calls at? The calls are pretty much worthless. I'm going to leave those on, although I don't expect this to go back up, but they're pretty much worthless already. All right. All right, the 4150s are currently going for 20 bucks and change, $21 and change. I do not want to be bounced on, so I'm trying to be patient, but they're adding a lot of liquidity lower. A lot of liquidity lower. He was very hawkish. Come on now. Get out of here with that. All right. All right, I'm about to close out these 4150s. Stand by, y'all. 4150. You have to remember, these little bitty candles at the bottom. These are 10-point candles. This little candle on the 3-minute that's forming now is a 10-point candle. So these candles look small relative to what we're seeing, but these are massive candles. That's why I'm sitting there watching my premiums go from, 18 bucks to 24 to 17 to 27. It's crazy. And we're about to put in a new low, baby. I need 32.80 to get 100%. But this is what I mean. I haven't caught, not once yet today have I caught the entire candle. I'm coming in like halfway through, even more later than that, and I'm still yielding huge gains. You don't need to catch the entire move to make great money. You just need to be smart. Make sure everything's in your direction, and then put on a trade. And if you are catching the tops, good on you. That's amazing. Oh, sorry about that. I've been a little busy trying to make that money. All right, so we already blasted down. I'll try once things kind of settle out. I'll calculate some more stuff. Levels down, but the big stuff I do have calculated down. The macros are well below. I've got 2240, 2210. I'm going to scale out again here, and I'm going to leave runners. I'm going to leave runners for 4150 puts. $23.80. 23.30, and coming on down here, $24. God, man, this is nuts. I'm not. If I re-enter a put, it's going to be far down, but I'm going to let these babies eat right now. Nice, PJ. Damien's killing it. Held the VIX. Yeah, that would have been a good little rebound, but I didn't want to hold the 50% loss. 171%. Nicely done. Wow. Wow. What do we got Bookmap doing? Look at that flush candle right there. Increasing volume. So VPA, baby. Volume is still maintaining. It's not dropping off. Coming on down to 41.32. And that is a flush candle right there, baby. Where are we at? $27. Still not getting the 100% I need, but I'll take it. Our strangle's doing beautifully well right now. Beautifully well right now. Coming up on 100%. Coming up on 100%. If I hold this thing down, this will be the biggest 100% portion of a trade I've had in about 5-6 weeks, ever since June. Because usually I'm scaled out significantly until now. but I'm still holding a larger amount that I would consider larger than runners. But still, I've already scaled out some. 21.27. Could today be a 7% halt day? Nah. I don't think, nothing was said that's that bad. How long do I let my runners run? As long as the price action dictates. So, we're at 30 bucks on these 41.50 puts, or in the money. That 41.20 YOLO would have been beautiful, wouldn't it? Yeah, he didn't say anything to make us that much of a circuit breaker. Unless the market capitulates, which I don't see that happening today. I don't think there's enough for that. But eventually we'll see that. You know, it may take a couple of months, but I've had so many cancellations today just based on the strangle losing this morning, and it was never down more than much at the open. And look at it now. That strangle's freaking paying. Paying. Jabroni. Oh, 14. Oh, nice, Larva. Oh, man, every time. Every single time I post a losing trade, I get cancellations. Every time. Doesn't matter what size, what I say. That's just what it does. It's, you know, it is what it is, though. 41.31. Yeah, so right now I'm looking at 41.20 puts. If we break down here, I'm looking for 41.20s. I'm going to close out my remainder 41.50s shortly. But look at this liquidity we got right here. You have to respect the liquidity. Yeah, I know that's what entrepreneurs do, but I don't really want to raise prices. Like I think this is a good win-win situation for me and you. And I don't want to start raising prices. I don't need to raise prices. So I think we could see 4,100 based on liquidity. You know, granted, it depends on how we react to the sell-off. You know, we got to see how this is working. We are squeezing big time to the downside under significant volume. We've got liquidity down 41.15. Do you think this more is going to be more swings and less day trades because next week and beyond I won't be here? I do intend to do more swings. That's the goal, is to get back into doing more swings like I used to do back in the crazy bull market that just went up. But in order to do that, I have to be able to pick a direction. I have to be able to identify a clear direction. And it's difficult to do that in bear markets. It's very difficult to do that in bear markets. Heck, I would sign up for a $100 server. Dude's a beast. Legend. Is the pre-prescriber price still active? Yes, but remember that price is active until January, and we're going where everyone's switching over. It'll be posted soon, Mauricio. I used to know a guy named Mauricio. Went to go work at NASA, based on what I told him. All right. Coming back down. All right, y'all tame enough where I could take off the 5-second slow mode? Y'all gonna behave yourself? There you go. Yeah, tell me about it, Spicy. Kale says, I'm feeling some FOMO on that huge move down, but I know better. Didn't you have a big win? Either way, yeah, I'm going to feel you. There's, just chill out, and remember that there's always going to be a move, the whole thing. And I know, like I said, everyone is posting big wins. We're doing very well, but you know, there's people out there losing too. There's people who took a call at the top and put at the bottom, all that stuff. So it happens. This is difficult and egregious price action. For sure. Nice, Mark. No, Captain Planet. Just because I think our server is one of the cheapest out there, so I feel that it's a good win-win for everyone. For what you get, I think $25 is pretty fair. For the SR levels and the communal knowledge. Is there a referral code for the VPA book? I don't have an affiliate with them. I don't. I would love to because they're great, but I have no official affiliation with Anna Coling. I love her teachings, and I have no problem pumping her book because I believe in what she does, and I believe in her teachings. Yes, Stephen. I think I'm about to close these 41. We're basing at the moment. We'll see if we're gonna come on down here, but I don't see any bullish activity now. It looks pretty weak on the bulls part. Tesla just put in a new low. XLF is hanging out. I don't see any bouncing, so I'm still gonna hold on here. But I am. I got my finger on the trigger here. They just absorbed 41.31, and look out here below to 41.15, and then even 4100. Beautiful, beautiful downside. After yesterday's massive 300% win on our significantly small lotto play. Triple my daily goal. Nice. No, you should be done, Double D. If you triple your daily goal, here's the deal. I'll tell you one or two options you need to do right now. One, be done, which I highly recommend. Or two, you play with money so small from here on out that it doesn't matter if you lose it. When you are up that much, do not give your profits back. So what else are you looking for? You tripled your daily goal. So what else are you looking for? That's what you need to ask yourself. What else do you want? You just pulled up to the best steakhouse in the country and you ate the biggest filet you could get with the juices and the sides and the trimmings, and now you're full and you're stuffed. And you're like, you know what? Let's go to Taco Bell. I'm still hungry. What else do you want? I like food references. What can I say? Nice, Jonathan. 11.5%. By the way, I'm still listening to your playlist, man. It's a great playlist. I love it. I apologize. I don't have any vegan references. I'm definitely a big meat eater, but. I'd be a great pathologist. Ask me how everything in medicine. Describe my foods. So. All right, 41.36. If we start taking out 41.41, that would pretty much break this bear flag, and we could have a temporary retracement. And I do not want to be a part of that in terms of my puts. And I'm going to exit these babies for a nice profit. I might go ahead and take off all risk, by the way, which I think I'm exactly what I'm going to do here, and I'll reposition. So the 41.60, 42.25 strangles that we took yesterday are profitable here. We're up about 15-20% on these babies. Let me click over. They're at price $28 as we speak. And I think they got up to $37 if I remember at the bottom of this. So I just want to go ahead and wipe all my risk and reposition into the next half of the day after some severe volatility. This is volatility that we haven't seen in a number of months. I do not, Mike. I occasionally peer at them, but I don't trade them. I'm willing. I'm actually growing interest in following those because a lot of people use tick, and I'm like, hey man, if if I can get something out of it, I'm always willing to try it. So I'm always willing to try it. I do love some Pav. I do love some Pav Bhaji, as Patient Purple knows. So I need to make that recipe. What am I looking for to short for reentry here? We're coming up to 41.45 it seems. That's the top liquidity. How's the volume and price action going to treat me there? 27.60, 27.70. I'm probably not going to be able to get a fill in this long leg, am I? Or the call leg. Oh yeah, I can get it. I get 70 cents for it. So we'll see. Yeah, that's one of the beautiful things. Obviously, I'm a huge meat eater. We do cookouts and we smoke meat all the time, but our neighbors are holistic vegetarians. They're obviously Indian. They're from India, and they opened my world up to a plethora of vegetarian foods, and it's beautiful. It's one of the best cuisines I've had. But it's very difficult for me to share my cuisine with him because most of my stuff is meat. So it's usually some cowboy caviar, that type of thing. Am I currently in position? Yes, I'm holding 41.50 puts, and I'm still holding the strangle from yesterday. How many years of experience are required to trade volatility like today? I mean, you could trade it. It's not necessarily the required experience. It's the required risk management. That's the huge thing. Because you could trade this volatility very successfully as long as you have proper position sizing. Here's the beauty about position sizing. Obviously, I talk about this every single day, and I'm sure you're sick of it by now, but it is important. When you trade small position size and you let's say you took a call at S1 right before the sell-off. If you're on YouTube, let's say you took a call right here. You're a jabroni and you took a call right there. Obviously, you immediately would have been red and you're freaking out. But if you are small positioned, if you are appropriately positioned, let's say you've got a $30,000 account and you only put $1,000 on that trade. So what? You're wrong. Who cares? Take a put. Leave the call on. Take a put. Get your juice. And then worry about managing the call. Get what you can to sell the call, and then manage the put to the downside. But if you full port, you can't do that. You're freaking out. You're running all over the house. You're punching your computer screen. You're just smoked your account. So when you position appropriately, you can take the loss on the call, take a put, and then let that thing fall off, and then you make money. And then you make more money on the winning position than you lost on the losing position. Who cares? All I care about is my bottom line. If I take 50 trades in a day, I lose 40 of them, I win 10 of them, and I turn out net profitable on the day. Do I care about those 40 losses? Absolutely not. I could care less. I hope the theta trader that got my profits enjoys them. Merry Christmas. I do not care. Because I am positioned appropriately. My position sizes are small enough where I can absorb the losses and win on the wins and be done. So, nice, Newton Rider. Well done. When you trade in today's situation, which moves up and down very quickly, how did you manage your stop loss? I didn't have a stop loss. It's too volatile to put a stop loss on a day like today. I mean, we're talking 20, 30 point candles. Your stop loss would have been smoked in 8 seconds. Well, obviously, you obviously win more than you lose. But all I'm talking about, the whole theme of that conversation is position sizing. So, position sizing will enable you to manage your positions appropriately. I think this is flagging, personally. I think this is a bear flag to go back down. That's what this looks like, apparently. Obviously, I could be wrong, but that's what this looks like. Especially with volatility on bookmap pointing lower. They removed a lot of that strangle of the levels. You saw it come off. It's still there though. They removed a lot of this liquidity here. They're putting on 55 now, but they still have liquidity lower. If we break over the swing high of 41.41, I will close out everything and then reposition for the next session. Can you do a podcast on that to not care if you're going to? Yeah, definitely. Is it hard emotionally to switch from losing puts to buying calls? At least I struggle with it. I mean, it depends on how you look at it. For me, I guess that's the sign of maturing as a trader, because if I take a call and I start to lose, but I put on a put and it completely wipes out my losses, to me that's a great decision. It's like, because I can't fault myself for being wrong, but I can fault myself for sitting there watch my position be wrong when I have the means to trade the opposite direction and make up the loss. If you have the means and the capital to do so, I think it's foolish of you to sit there and watch your position just tank into nothing. I would rather put on some directional risk in the direction that should be correct, and then worry about the loss. And that's just part of being maturing as a trader and trying to learn experience on how to manage your positions. You can't expect to always be right. I'm never right 100% of the time. No one is. So you can't expect to build a system that is dependent on you being correct all the time, because you're not going to be correct all the time. You have to build a system on risk management, on managing positions when you lose. The big miss. Golf metaphor incoming. The big miss. The one who wins the golf tournament is the one who misses the least. All right, we are dead flat here, 41.35. This strangle is now positioned at 30 bucks. I think I'm going to go ahead and take that. That's a great win for a strangle, especially considering we were down 50% on that earlier today. So, nice, ELO, 11%. When do you know when to trade against yourself like that? Is it usually it rarely has to do with dollar amount or percentage. It has to do with the price action. It has to do with the price action. So this is a bear leg right now. Let's see if we can continue on down to 41.20. Look at that heat map. Jeez Louise. I think the big technical and the big options chain we need to pay attention to today is the IV. When I saw that IV, which I did not expect, I didn't expect that big of a jump in IV. So when we woke up to a 110% increase in premiums with a gigantic pop in IV, that tells me there's going to be a big move made. And wham bam, look what happened. So that's the first indication of why I elected to hold that strangle. When I see IV do that, that strangle should have been down 50% at the bell. That should have been the market open. That strangle should have been down 50%. But it wasn't. It was down 12% because IV went from 26 to 54. So when I see that, that's the market telling me, giving me a little elbow on the side, there's about to be a move made. We need to be ready for it. So I elected to hold the strangle and just manage the position through directionality. So instead of trying to figure out, do I need to close the call, close the put of the strangle, I left that on. I kind of put a bow on it, forgot about it, and now I'm going to manage my portfolio with strangles, with a call or a put, depending on the price action. And I did a little bit of everything here. It's not been my morning. I appreciate the frequent discussion of adding trades, but coming to Discord, these 2 trades would have been disastrous. But I'm still alive. I have 80% of my cash account available to trade. There you go. Well, I appreciate you being honest. That's, you've taken a couple losses. That's why we're here. But look what you did. You manage something that otherwise would have been a disaster, and now you can go forward. So well done. All right, 41.29, 41.30 coming off. All right, look at that. That just juiced the premiums on the strangle to 35 bucks. So if we can get one more pump down, this thing could be very profitable. And they buy it back up. When you draw on your chart in a given day, do you remove those lines for the next day? Trend lines on the if you're talking about the 3 and 5 minute, yes, I go ahead and remove that because those are no longer valid. I leave trend lines on that are 60 minute and above. So anything that I calculate on the 60 minute and the daily, I leave on. I also delete all the SR levels. SR levels don't transfer over day to day. All right, here we go. Coming off. Let's go, baby. Still holding the 41.50 put, still holding the strangle. If we could take out the low of the day and pop out, watch this. Hey, watch the absorption on Bookmap. We've got 41.25 liquidity. I'm looking for absorption of this level. If we can get this big pop and then blow through it. We're almost to $40 on the strangle. Almost to $40 on the strangle. Pretty much that is the entirety of the call of the put because the call is out. In fact, what I'm going to do here, I'm not going to close out the call. So instead of talking about the strangle, what I'm going to do is bring up my order form. I'm going to X out the call and only monitor the put because that's the only premium I care about. The call is pretty much already completely worthless. So right now, all I care about is managing the put because if I try to close out the strangle when I want to and be very accurate, I may not be able to get a fill on the call, and that's going to delay my entry and it's going to mess me up. So instead of trying to close out the entire strangle at once, I'm only going to try to close out the put side so I can make sure I get a fill. Anyway, 41.28 coming down, testing the low of the day, 41.25.75. And we can't absorb this liquidity as we're bouncing off 41.25, which is well below all of our SR levels. That's all, yeah. Broker awareness is very important. You have to be able to manage your broker and how to do it. It's huge. Apple's getting smoked in the face. That apple is rotten. We have Microsoft coming off. We've got Amazon trying to break out of their bear leg to the downside. XLF rolled over again. Google is 111.89. What's the dollar doing? I want to keep an eye on the dollar. The dollar had some volatility. Dollar bill, y'all. All right, so the dollar sold off and had a strong recovery back up to 108.39. The bonds are telling me volatility. The bonds are screaming up to 113, and the yields are not really moving here. So there's a new test here of 126. The puts for the strangle are now priced at $38, and we're going down, baby. 41.25 is absorbed on Bookmap. Let's try to take out 41.20 here. I'm almost at 100% on the 41.50 puts. I'm looking to add, instead of looking to close out positions, I'm going to look to add positions. And right now I'm looking at 41.20 puts, which are $12.40. We just took out the low. Let's see what we can do. smoke show. Look at this. Look at this. Wow. 90%. Let's go, baby. Look at this move. No, I didn't take the 4120s yet, so there's no banana to be had. I didn't take it yet. God, this thing is just blasting through, man. Microsoft is dropping. Everything is coming off, and look at this freaking move. Wow. Holy crap. I just blew through 100% on this trade. Blew through 100% on this trade. I'm taking profits here on this. Wow. $33.10 for the remainder of this position. Wow. Oh, yeah. Definitely trend down. Couldn't get a fill on that stupid thing. Look at that. Big old bottom wick. Was down the day, now up. Nice, Ron. Well done. Close half of the 4100s. That's an aggressive play, John. 4100s. Aggressive play. 4150s, $34 at the moment. Bam, just got filled. Beautiful. Beautiful, beautiful, beautiful. Still holding runners remaining. Gah. If this thing can drop, man. Gah. And still going down. This is ridiculous. Patience, man. I am... Holy crap. All right. Bear with me. I think I'm going to close out my strangle here. 4160s. So 4160 puts are $40. $42 now. Oh, don't do that to me. This thing is just going down, y'all. All right, $44. It's almost at 100%. Almost at 100%. $46 and just dropping. Hold on a second. 4150 puts are $37, going up for 150%. All right, I'm about to close out the 4150s and be done with it. $37.70. I'll put on for $38. See if we can get a fill. Wow. We're down 2%. I didn't even notice that. Oh, so forgive me, I'm trying to juggle all this. 41.15, 41.14 and going. Dropping on down. I got $40 for the 41.50 puts. The strangle is doing incredibly well. I'm going to go ahead and close this baby. I'm going to go ahead and take that off. $46. God. Crazy. This reminds me of a certain video you released from May. Whew, man, you know it. You know it. Unbelievable. This came out of nowhere, dude. I did not expect this kind of day, and what a freaking day. That's why patience, dude. Patience on positioning on the days, and you get a day like today. The market tosses you a softball, and you crank it. I'll try to. I don't have the time right now to calculate them, but I'll try. If we get some downtime, I'll calculate them. So, how bad was the news? I didn't think it was. I mean, he was hawkish, but he didn't say anything we didn't already know. I think it was just him saying it is what's causing this. Because all of the players are like, man, he's just going to be dovish. He's going to support the market. Yay, And then here we go. He says nothing but bad news, and look what happens. Oh, wow, unbelievable. The only bad decision I've made in the past couple of days is this stupid VIX call that I closed, but either way, I was done dealing with that. I'd rather focus on the good stuff. There you go. 41. Got a lot going on here. All right. I closed the put leg of the strangle. I'm done with that play. That play served its purpose. So we will see what happens. Now, I'm still holding the 4150s, but I closed out. Unfortunately, I didn't trade any futures. This is I didn't expect this much volatility. If I saw this day coming, I would have shorted some futures and come on down, but I didn't see this coming. I've been so busy, putting these positions on and talking to y'all and doing the book map. I didn't take a futures trade, unfortunately. But still, most profitable day I've had in about 7 weeks. All right, so I'm going to post this closing here. Oh, man. I'm going to need a downer after that. That's crazy. Still holding the 4150 put. That's the only thing I'm holding at the moment. Well, I guess the call leg of the 4225 call, but that thing is, it's worthless. So, do we get into calls here? Maybe for a temporary bounce. I would not call this. I would not look for a reversal yet. I would plan on potentially a small profit-taking bounce, and then we'll decide whether or not it's a reversal. But I would be hard pressed to see that kind of movement, but we'll see. We will see. Wow. Wow. Made 60% on 41.20, but still down 7% on your account. Learning fully. Took an oversized trade. Hey, but you made some back, so that's what counts. Still holding the 41.50 put. My whole system crashed. I hate when that happens. What's my thoughts on Power Hour? Man, I don't know. This is a full-on reversal on the daily. This is a big, big move under. You know what the difference is between this one and Monday's? Volume Roni. So this is a full-on reversal. We're only an hour and a half in, and we already have more than half of the entire volume we had on Monday, and we're only an hour and a half into the day. So this is a full-on reversal on the daily, on the weekly, on every single time frame. So we have time frame continuity, we have volume, we have price action, we have option chain participation, we have bookmap. Pretty much every indication that we're going down is here. So I don't know. I'm inclined to see a continuation down here based on what I'm seeing with the bullish volume implementing. So we'll see. We'll see. Yeah, I don't think JP Morgan actually said that. I know a lot of people came out and said JP Morgan was looking for 4,800 by the end of the year, but I don't think they actually said that. That would be incredibly irresponsible for them to say, especially since that their JP Morgan collar does not reflect that. And I'm curious to see what they're going to roll their collar to here coming up in a month. So I'm eating just fine right now, Summer Econ. Eating just fine. All right, so I'm going to forget about the 42.25 calls. I hope if y'all don't understand why, let me know. So the only thing I'm holding remaining now are the 41.50 puts. Actively managing, I should say, the 41.50 puts. So they are doing very well. We just put in a new low right there. Holy crap, still coming on down. I haven't calculated S9 or 15 or whatever we're at. Bookmap is adding 4,100. This is still going down. $39, $40. Gah. Someone out there is going to be posting a couple of 1,000%er. So yeah, absolutely downtrend. Absolutely. This is one of those days where you do want to, it's okay to be more aggressive on strikes, but you still make it realistic. Don't take like a 40-60 put or something. Make it realistic. What is causing this drop? The market is probably the market is probably pricing in a higher hike because everything he said was bad. Everything he said was quite hawkish. Now, honestly, that's not really anything different than what we've been seeing. We've been seeing negative news and hawkish news since frickin', June. Nothing's changed. Even the PCE data was bad. We had PCE was bad, and we come out here and say that what he said today. I think the market is just finally like, we're going to have to start pricing in a higher hike. We came up to 4,300 and then rejected. Yeah, he mentioned Paul Volcker too. So. God, this is nuts. If you held on to that put about 5 minutes longer than I did, you probably could have got a $50 fill right there instead of a $42 fill like I did. But yep, still holding the 41.50s. Still holding the 41.50s. I may go ahead and close them and just start looking at lower because this is just silly. Every time I say I'm going to look at closing, it just keeps on dropping. All right, I'm also looking at 41. I might even throw it down to 4100. 4100 are going for $8. I've made so much freaking money today. I might not throw in a little risk down there, but they've got 4100 liquidity to the south, 40.97 to 40.95. Set a stop and hit the gym. Yeah, that's what I'm about to do. I'm about to go do a kettlebell workout. Correct, Proggy. I'm on zeros. That would be probably what, a 3% day if we hit 40.60, if not more. Wow, look at this. Man, this is just silly now. $45 on my 4150s. $45 on my 4150s. I'm about to hit 200%. If this goes down and closes down, I will look for a red open on Sunday night with a potential relief bounce going into the bell and then a continuation down during the trading day on Monday. And this thing is still going. Yeah, you got to look for a bounce at 4100 for sure. Maybe just small bounce, but there's always some sort of bounce at 4100. And if you remember, 4100 is a freaking it's an iron sheet. So crazy. Like, I'm beyond the euphoric phase and I'm just sitting there like, holy crap, how far can this go? I'm already out 200% on this play. Gah. Yep, this is absolutely algos. Like, the computer's big money is dumping everything. Yeah, this is a dumperoni. So Monday's sell-off, we had a trend down day on Monday. Monday we only had about a 1.5 million of volume, and now we are already at a million right now, and we're only an hour and 2 hours into the day. We've already had 60% of Monday's volume already. So I mean, it's definitely a continuated sell-off here. Continuing sell-off, not continuated. I don't even know if that's a word. There's 4107. So, wow. Threw you a like, but I have to quit watching for the day and take my $300 and run. Nice. Thanks, TK. Thanks for being here. Appreciate it. By the way, 500 people watching. If you wouldn't mind, hit that like button. If you made some money today, hit that like button. If you didn't, you can hit the dislike. I understand. Let me know what you think. Appreciate that. Missed that move, lost on the first pullback. Do you think it's going to be an entry if this downtrend or better target and trade on Monday? Yeah, so it all depends on how we close it. What do I think for Monday? Is there a maybe button? How do you lose money on a put today? You probably took on that, if I had to guess, you took a put on the big bounceroni off S5. Nice, Mauricio. Have a good weekend, man. Thanks for being here. Yep, still holding the 4150s. Has the ones that canceled sign up? No, I was telling Lee right that oddly enough, that I've had more cancellations today than any other day this month. So I think it's because a lot of people were probably holding positions that were not posted in the room and they got smoked. You know, anytime we have the first sell-off like this, people get smoked because they continue to be bullish. They don't listen to, our claims of risk of holding, and they get smoked on the first pullback, and then everyone gets bearish and we all make money. But yeah, we're well below all the SR levels, and I just don't have time to calculate them at the moment. But once I sign off here, I'll go and I'll calculate some new levels. But 4100, I'll tell you, 4100 is huge. If you're if you are tier 2, we're coming back on our macro, which is going to be substantial. No, most cancellations are people that just signed up within a month or so. They're not any long-term stuff. Thanks, Quick. Well, you know. Thanks, Havs. Appreciate that. Yeah, thanks for being here. Four minutes until UK closes. Don't put that evil on us, Blaze Trader. Oh, thanks, Wrenchy. Appreciate that. I may not be the best around, but I'm always going to tell you all the truth. That's for sure. I'm going to keep it real with y'all, and that's all there is. Because I've been through there. I've been mad. I've thrown stuff. I've been happy. I've done it all. I've done it all. Appreciate y'all. You're all awesome. It's very difficult with zero DTE. I got smoked today when managed my trade. So I have to sit by and watch you guys make money. Well, zeros are difficult. You can always go longer. If you're not, I would always encourage you all to go longer on your DTEs. I do not see a V recovery today. Obviously there's always a risk of that, but today I don't see it. Unless the conditions change drastically in the upcoming hour, I just don't see it. Other than I mean a true V recovery, I do expect some sort of recovery just as people close out shorts and buyers reposition and whatnot. But I don't expect a complete recovery. There's just too much. There's too much selling pressure. There's too much. There's too much analysis here that's pointing down. Well, thanks, McCollum. When big money gets on board and they kick on those algorithms, that big old dollop of marinara falls out of their chicken parm sandwich and jumps on the little algo sell button, we continue on down. Why are puts better than shorts? So you're talking about why take a long put instead of shorting a stock or shorting into futures? The payoff. Options, there's not a better return on an investment vehicle than an option paying off the way you want it to. Right now, Bookmap just had 41.15 put on and taken off. That did not transact. If you see that, that was a spoof. 41.15 came on. They removed it. Now we're trying to come down to see if we can transact what remains at 41.16. And they still have liquidity lower. The majority of liquidity is lower. We still have some up above, but still. Do I ever take long puts or calls in the SPX and just hold them for weeks? I haven't done that in a while, but I do. I did that back in June, and then that's where we got that 1700% win. I think I held it for 3 weeks. Like I held that for like 20 days, and I got 1700%. So occasionally I will, but most of the time it's just day trades. Oh, thanks, Slimy. Appreciate that. I'd love to have you. So what I'm doing here to manage my position, and I'm going to show you. And these are my dynamic levels that I plot, that I look for potential reversals. So those are the lines on the sand where if those break, I'm closing out the 41.50. We didn't get there the first time, and we're not getting there yet. So monitor those swing high levels, dynamic levels, to judge when you need to enter and exit. Don't exit based on your P&L. Exit based on the chart. That's how I do it, as I set dynamic swing highs and lows, where I'll enter under a breach of whatever, and I'll exit based on a breach of another one. And what that allows you to do, it allows you to let the market tell you what it wants to do. The market is going to form its natural supply and demand zones, and that just forming those little swing levels allows you to identify those, especially since we don't have any S levels down here. You know, we've got these dynamic levels we could follow. You could. I think that I mean you're fighting it. That's a counter trend trade. So today a call is counter trend. So if you do take a call, just be quick on the trigger to exit. Twitter is quiet. I have not actually. I haven't, Tim. I do need to read that. I need to put that on my list. Yes, patient purple. Still holding them. Still holding them. If we close a 3-minute candle over that swing low level or swing high level that I posted, I will close out the 41.50s. Until then, I'm holding them. Valhalla, baby. Is that 40.80 still on there? Didn't they have 40.80 on? Let's take a look. Is it best to take an in the money, at the money, or outside the money option? Depends on you. Outside the money is going to pay more. Inside the money is going to pay less. But obviously the risk is reward. You know, the deeper in the money you go, the less risk you take, but the less return. The further outside the money you go, the more return you potentially can make, but more risk. The riskiest play you could take in option trading is a close dated outside the money play. That's the top risk you could take on option trade. So I manage it. I personally play slightly outside the money, 0 DTE positions. That's what I trade most of the time. because that pays the most. It balances risk, my personal risk reward, my risk tolerance, my tolerance to drawdowns. Some people may not be able to handle that, so they have to pull it back a little bit or go further on expirations. I'm new to your podcast, and I always miss when you take a position. I always miss when you take a position. Yeah, so we've created a banana, statement where I usually call out banana just to clarify that. Today was pretty hectic, so I was all over the place today. If I have enough time, I'll post the trade live in day trades as quick as I can. And then if not, I'll be calling them out here. Any thoughts on retracement levels long term? Yep. I've got, I actually post my strength levels for that particular reason for the tier 2 people. Cannot believe they banned him. Zero hedge. Well, what would be ideal for a situation we can't listen to get posted and we get to learn on phone? Yeah, sure. I try to post these as quickly as possible. Whenever I enter a play and I get settled in, I'll go post it. But today, like today, man, things were moving. When you're dealing with 30-point candles, it's so difficult to catch these things accurately. So. Yeah, Twitter banned Zero Hedge. I think he's back on now, but they banned him. Zero Hedge is a Twitter account. He's got several million followers. He's a big deal. But he posts like pretty truthful stuff. He is politically leaned in one direction. So you have to be, look through it with a certain lens, but he does post stuff that's pretty truthful, like the stuff that the mainstream media doesn't necessarily post. Head zero. Yeah. 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 Ops on SPX versus SPY. I personally do SPX, but we talk about the S&P overall. So. I'm going to exit the 4150s. Yes, correct. So that 4123.50 level, that's where I'll look at closing out my 4150s. That'll indicate a bearish overtake, or I'm sorry, a bullish overtake, and I don't want to be a part of that. And of course, if we take out 4106, then I'm going to get fillets for dinner. Just so I'm making sure I'm helping everybody. Did anybody take a PCS right now that is hurting? Is anybody holding credit spreads that are hurting right now? Those red and blue dots, those are stops and icebergs. So the red numbers are stops, blue numbers are icebergs. Do you have a money in mind? Do you have an amount of money in mind that you'd just be like, all right, I'm done? 7 million in liquid cash. $7 million would be my see ya. You'll never see me again. But now, that thing's changed obviously because I have a responsibility to you all, which I would stick around. But that's always been my line in the sand number. Whereas I would go buy 1,000 acres in Montana. I'd put a house smack dab in the middle of it, and that'd be the last you see of OM. So. Seven sevens, yeah. That's right. Oh, for sure. And I love y'all, man. Plus, I've got a responsibility now, and I truly do love doing this. It's a lot of fun. It's made trading more than just, the profits. It's made helping, and it's a lot of fun. I truly enjoy it. Well, that's the whole point, John. It's giving back. All of this is helping our fellow man. So, helping people in need. That's what the Bible calls us to do. That's what I think the whole purpose of life is. I appreciate y'all. Wider spreads on it. Yeah, so the SPX is going to have wider spreads, but we're not talking about a low liquidity index here. We're talking about the most heavily traded index in the world. So, yes, it is wider spread, but I've never had a problem getting filled on SPX. So, obviously, you're never going to be able to beat the spread on SPY. SPY is the gold standard for tight spreads. 1 cent. Can't beat that. For SPX, sure, a little bit wider, but in my opinion, it's just not even close to being a big enough problem to me to not want to trade SPX. The commissions alone. The commissions alone are the savings on commissions, I should say, are enough to just stay on SPX. Are market orders an issue? What do you mean by an issue? I never do market issues because I think market orders, I think they're terrible. But what do you mean? Oh no, never. A terrible fill. Terrible fill. Getting a fill is never a problem. Getting a terrible fill is dependent on the situation. If, for example, let's say you were, let's see. If you did a market order on one of these moves, if you would have looked at the bid and ask when we started making that huge move at 10 o'clock, you would have seen some crazy movement in price. So market order there is a terrible idea to sell because you'll get something crazy. So if it's not volatile and we're pretty much stuck in chopping, market order, you're not going to get a crazy fill on a market order. But when things get volatile, you may get a terrible, terrible fill on a market order. It all depends on the volatility. That one time I had a 300% fill on a market order because I was trying to sell it. What had happened, the reason why I took that trade is because I longed ES in post-market. It was during an Apple or an Amazon event where Apple and Amazon were super bullish and we were down on the day, but then we started to bounce. When I saw Apple and Amazon go crazy, ES started to bounce, and I was watching the spreads on the ES, and it was going nuts. So I just put in a limit order to sell way the heck above, like a 300% gain, and I got filled. I got a rogue filled because someone did a market order on a high volatile area, and they paid me. So, all right, 4150s currently going for $35. I might go ahead and close these babies out and be done with it because I'm hungry, and I don't want to deal with this anymore. Yeah, job losses are terrible. Just wait until U.S. manufacturing breaks down. You just wait. That's why the dollar. That's why the dollar is going to hurt us. One of the reasons why the dollar is skyrocketing is no bueno. Sorry about that. There you go. On your put, is theta affecting it much now that we're hovering? Well, the good thing about it is that it's incredibly in the money. So I love holding positions that are in the money like this because the effect on them is negligible, and I can still hold premium. I mean, these things are still trading at $37, $36, and they've been chopping here for what, an hour now? We've been chopping here 45 minutes. So that's why I want to be very. I don't want to be too quick to close these babies out because if we do drop below and touch 4,100, I could have a 300% win here. So. Nice, Phil. Now, I'm telling you all as well. Y'all know I'm bearish long term. That's no secret. When they start talking about rate cuts, you're going to see the biggest rally you've ever seen in your life. But it's only going to come after we have a significant decline in the equities. And you want to talk about a face ripper, you just wait. Because I do believe that 2020 and 21, the monetary policy has shifted the way the market reacts. They've brought in a crap ton of liquidity. So I do think the game will be changed a little bit. But once we kind of shift out of what we had in 20 and we sell back off and kind of refresh the market, and then he starts cutting rates and they start talking about supportive or dovish monetary policy, which is unrestricted, I think we'll have a incredible face ripper. One that will be one for the books. How long do I have this channel? I've had this since I started YouTube, May of 21? April? I can't remember when I started doing YouTube live stream. I think it was May or April of 21. So going on about a month and a half. Do I believe I'll break down between below 41.10 today? If we don't take out this swing high, based on what I'm seeing here, we could potentially take out 4,100. 4,100 will be tough to break. It'll be tough to break. Yep, we got midterms coming up here too. No, 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 no. Not yet. I'm holding the rest of this 4150. When's the next catalyst? The next big catalyst, well, we still have, the remainder of today for any kind of notes from the symposium, but we have CPI and then the next FOMC. Remember, we did not have an FOMC in August, so we do have an FOMC coming up in September, which will be substantial. I think when they start talking about this September, here's the deal. What happened in July, running up on all this bad news, every time we got a bad news post, we rocketed. That only works if the thesis by why we've rallied holds intact. The reason why we rallied throughout all of this stuff, it was initiated by short covering. But the reason why we rallied like 17% and Apple went up 50% is because everyone thought that all those bad numbers had peaked, and it was the sign that Jay Powell was going to be less restrictive on their hikes. It was going to be more dovish on their monetary policy. That only works is if that holds out. Because if September comes along and CPI goes in higher, and then they hike more rates at FOMC higher than anticipated, higher than 50 points, then we're going to sell off aggressively. Because we have to undo all of that damage on the options chain that was created by the rally in July and June, or in July and August. So, and I don't want to get political, but the student loan thing, all I'm going to say about that is that in politics, they got to politic. Politicians have to politic. And that is a very strategic move for announcing the student loans thing, especially since that there's a good chance that could be shot down. But it's all about the midterms. Right now, the Biden administration right now is on track to lose the House, or to lose the midterms, and they have to be able to do some damage control. So all this stuff, based on what he said with the Fed back in, I think, May, he came out and said that it's all strategery. We have job numbers too. Yeah, job numbers. Forgot about that. So, all right, here we go. I'm going to close these out. I think, oh, no, there's a double tap. Let's watch this 3-minute candle close. We'll see what comes on. Anyway, I don't want to get political with that. I'm just talking about the timing of it. And, everyone has their opinions on it. But I was talking about the timing. No, I'll still be here. Do I play options of individual stock before earnings? Occasionally I will. I don't do that often. Earnings plays are gambles, so I don't play that very often, but occasionally I will. So that 3-minute still ain't closing above, so I'm still holding the 4150 until we close a 3-minute candle above that swing high level. There you go. Well, if anyone needs clarification or how-tos on that strangle, then by all means, that's why we're here. And I don't want anyone to take that play if they don't understand it. So, but let's talk about it. Let's learn from it. 100%. Bear with me now because I've got a substantial amount of DMs and I'll get to them. But yeah. You have to be very careful with strangles because strangles, if you're wrong, you're taking double the loss, like double mint gum except options. So you have to be very strategic with when you're going to take a strangle. All right, let's back off on the student loan stuff. Let's take it to the general chat. Yeah, straddles are beautiful for day like straddles or strangles are beautiful for day like today. So yeah, that book that's the aggravating part about Bookmap is if I touch this at all, then it stops moving and I have to hit the live button to get it back to tracking live. So that's why it continues to do that. But all right, so we're chopping a little bit. So here's my review on Top Gun. Fantastic movie. I think the flight characteristics and they did a lot of stuff that was accurate and fantastic. The way they fire up the F-14, the way they do their pre-flight. A couple of words they use were great. A little corny, pilots don't sit there and square up like that in a very corny way, or they don't really, the whole call sign thing. It is what it is. But the mission was completely unrealistic. It would never happen in a million years. They would use different vehicles in order to do that. That F-18 would have been ripped apart, pulling 10 Gs on an upward ascent like that. But all in all, I'm pretty happy with it. I think they did a fantastic job. So playing football in jean shorts in aviators on the beach is obviously Hollywood. That would never happen. We would wear normal bathing suits like normal people. But all in all, I'm very happy with the cinematics. I'm very happy with the way it was done. So yeah. To be fair, they are Navy. Yeah. Yeah, jean shorts, yeah. Uh-oh. Matt H is triggered. What about the cyclone scene? Has that ever actually happened? Has that ever? You talk about the cyclone maneuver to the downside? Yeah, no. I was actually watching that. I was talking to Mrs. OM. She was watching it with me, and I was like, no, this is absolute garbage. Like, there's no way. Just a choreographed cyclone move down. I think they call it the Cobra move, where they just oscillate into the ground like that. No. So. No, I don't look anything like Tom Cruise. I would say I look more like the guy in the original Top Gun at the very beginning that says, "I want some butts." That was me. That's me. No, the dog poop. Flying cargo ships of plastic dog poop out of Hong Kong. That's me. That's what I look like. Yeah, exactly. No, not him. Not him. I was incorrect. But it's also the principal in. He's also the principal in Back to the Future. Yeah, that's me.
You remember one thing. You screw up
This guy.
this much. You'll be flying a cargo
Great movie. Yeah, you're a slacker. Yeah, that guy. All right. What are your thoughts on the hundreds of UAPs and other alien craft that are surrounded the Omaha? I don't know. I don't know. Bob Ross or Casey Kasem? Man, you're bringing us back to the 90s, ain't you? Casey Kasem. Hey, I'm Casey Kasem, 107.5. When you set up a strangle, do you pick at the money? Well, an at the money would be a straddle. So I do a strangle, which is about 30 points. I do 30 points outside the money, but it's identified by any strike that's different outside the money. So I do 30 points outside the money. Normally, because in this market, that's pretty realistic on it when I'm trying to play that. That's pretty much spot on, Brendan. Pretty much spot on. Except, I don't know. Depends what you mean by muscular. I work out, but I like tacos. There you go. All right, here we're coming on back down again. Now that exact look at my thesis. Look how well that thesis played out. I'm not closing until I close a 3-minute candle over the swing high. And this is why you have to have a thesis and not trade your P&L. Look at that. Beautiful. Didn't close above it. Right back down. My premium just went from 32 to 42. Nice. Well done. Well, you have to look at the close, heavy metal. Not just a breach. You have to look at the close of the candle. The close of the candle. Oh, thank you. Where do we have to close in the day for you to consider a red Monday? 4,100 is a huge level. So there are two things that it's a good question. There are two instances where I would look at a red open on Monday. One, we obviously blow through 4,100 and go, or two, we close here. We just stay here. If we bounce and come back up to like 4,160, then I do not think we'll have a red open on Monday. But if this is truly a bearish day where we trend down, the algorithms stay down, the buyers never come into play here, then I think we'll open red. I think we'll open red. We'll have some sort of buyer's relief early morning in like during the extended hours trading on Monday, and then we'll have more drop going on into the bell. And look at this. We just put in a new low, or we tested the new low. So, what's the swing high I'm referring to? Right there. So click on that. That white line at 41.2350 is right there. Just close the strangle for 300%. Well done, Burton Pop. Well done. Thanks, Spy Hunter. Appreciate that. Why don't I obey my stop losses? That is, I mean, if you're going to put a stop loss on, then be honest with yourself. It's kind of like setting your alarm at 4 o'clock in the morning and saying you're going to the gym, dang well knowing that you're going to hit snooze on that and not go. It's like, why even set it? So if you're going to set a stop loss, then you have to be able to respect that stop loss. Otherwise, just don't set it. don't set it, because you don't want to. It's just you're going to put yourself in a bad position there. That's why the reasons I set stop losses strategically. With options trading, especially options trading on 0 DTEs, it's difficult to put on stop losses because you can get stopped out in one candle. So I do have a podcast, yes. Making Millionaires is the name of the podcast. Yep. Making Millionaires. Here, I'll get you a list of it right there. Where'd it go? Where'd my podcast go? There you go. There is one other dude that's got the same podcast, but he's only posted one episode, and it was from like 4 years ago. So I am commandeering the name Making Millionaires. You're welcome. Appreciate y'all. Oh, thanks, Nate Dog. That was my first attempt at that kind of thing, so I was happy the way it turned out. All right, new low on the day, continuing to drop on the 4150s, and I'm almost at 200%. Do I use a stop loss for all my trades? Nope. In fact, I don't use a stop loss for most of my trades. How do I avoid a panic sell for profit? What could have been a 30-point day is only a 5-point day. For the one thing, just like we're talking about the swing high, low levels that I'm doing, make sure you use those, because that's going to give you levels that the market is going to respect. So when we enter a period of consolidation like right now, I'm looking for either one of two things: a close on the 3-minute above or a close on the 3-minute below. We haven't done either of those things yet, so I'm still holding my 4150s. So that allows me to hold on to a play given on data, not emotions. And then if I close a candle over 41.2350, I'm exiting. There isn't. I haven't made a YouTube video on that. However, I think I'm going to do that. I think that's, especially as much as y'all want to know about them, I might do that. I got my little handy dandy content notebook for content ideas. So. Right now it's 41.2350. 41.2350. Here's another lesson I'll teach y'all. All right. You see that right there? So the first time I calculated that level off of the first rejection, the first yellow arrow. The second time, we actually put in a higher. We did go higher, but we didn't close above it. However, I'm not moving that level up to that arrow. I'm keeping it originally where I want it, because I don't want to get in the habit of adjusting levels, because you start to bring in manipulated data. You start skewing data. I don't want to skew anything. If I want to maintain a consistent system, I want to have things the same way every time, and I don't want to move stuff. The definition of a swing high and low is that during a segmented time period, like between, for example, now 11:15 and now, which has been about an hour, we have put in a little range here of 41.23 to 41.06. So I want to calculate those swing highs and lows and let the market tell me when it wants to break out of that consolidation. Because my SR levels are fantastic, but the market is still going to move relative to the price action. It's going to do its own thing, and these dynamic swing high lows allow me to identify those levels, and I play off of those levels. Instead of guessing when do I need to enter and exit, let the market tell me when I need to enter and exit, and stop being a jabroni. I see a lot of YouTube people talking about selling covered calls on their positions. Thoughts on potential losing? I don't do that. I personally don't do that. With my long-term account, because you're writing covered calls on your long-term positions, I literally don't want to. I don't want to check 4 times a year. I want to check my long-term account. That's it, once a quarter. Unless something crazy is happening, I need to go in there and look. I don't want to touch it. So I don't want to go in there and have to deal with selling covered calls and doing all that stuff. So yeah, I'm sure that's a great way to make income. In fact, it is. It's just something I don't want to do. I like keeping things nice and easy. I personally look for a break on the 3-minute chart. I want to see a candle close on the 3-minute. And if you notice on that screenshot I just posted, we had a candle go below, but it wicked up and it closed inside the range. I want to see it close outside one of those ranges for me to make a decision. That's going to keep me from getting wicked out. It's a regular brokerage account. Now, I do have retirement accounts. I'd have multiple retirement accounts, but my long-term trading account is strictly just a brokerage account that I have holdings in. Absolutely. I don't. You can do that, but I do not do that. I don't do that. If I'm doing option trading, I want that money right now. I am JG Wentworth, baby. If I'm option trading, I want that money now. Because I promise you, one of the things I haven't actually talked about this in a while. If you're options trading, even if you are net loss, if you're in a net loss position for the year, you still need to get in the habit of taking profits out of your account. Because otherwise, you're not going to be invested. For example, if you're down, say on January 1st you put $10,000 in your account. Let's say you lost half of that. Let's say now you're down to $5,000. However, today you made $1,000. Today you made a lot of money. Take some of that out. Even though you're not still net profitable on the year, you have to enjoy some of the profits. Otherwise, you're going to lose. You're going to get burnt out. So. And if you're with an IRA, you can never enjoy the spoils of all your effort. You will be able to when you're 65, and you can go play bingo and baccarat, whatever. But I want to be able to enjoy that now. Pickleball, there you go. Not to mention, I don't want my retirement have to do on option trading because we know how volatile option trading is. Well, bag holding is a loss, so day trading. But if you're talking about swing trading, historically I'm more profitable doing swing trading. However, the market's changed in the past couple of months, years, so I'm doing day trading. My daughter is 4 right now. She has been to 12 national parks all over the country. Nicely done. All thanks to options. Yeah, I mean, my daughter's been to Yosemite because of my investments. I have never been west of the Mississippi River except for military trading until I was a grown adult, until I can afford to do so on my own dime. And those investments have allowed me to take my daughter to Yosemite. So, man, it's unbelievable. It's one of the most amazing places on earth. I mean, if you're talking about a high-level view, long-term holding is more profitable. But I've made a kill in the past couple of years. How do you grow an account under PDT? First thing you need to do is go switch to a cash account. Do not do a margin account so you can unlock your full ability. Here's another test. We didn't even get back up to the swing high, so here's a breakdown to 4100, 4106 again. I'm in Boston. Great puck. Well, I'm a Yankees fan, so. Oh, nice. In Boston, too. Most of the time I don't scale in. I do scale out though, but most of the time I just take a lump sum entry and then I scale out. I'm definitely a country boy though, but I'm a Yankees fan. I was born in New York City and moved to the South when I was 4 years old. All right, here's another test. Let's see if we can close this candle below. Close this candle below. I'm almost at 200%, baby. Let's go. Come on, break down at 40. Now, y'all need to understand the significance of breaking 4100. If we take out 4100 and then we take out our macro level below that, it's going to be a smoke fest. To grow a PDT account, a sub PDT, you need one, switch to a cash account. Two, maintain proper position sizing. And that's really it. Learn how to do this. There's not really a good, crystal ball I can hand you, but it's really just make sure you're maintaining position sizing so as you learn, you can absorb losses. Because if you full port, your learning curve is going to be incredibly high and you're going to be done in about a month, if that. So never stop grinding, never quit, small position sizing. That's it. All right, just put in another low there, 4104. I'm still holding the 4105s. I'm sorry, the 4150s. And these things are blasteronies, man. Look at this, 4102. All right, here's the first test of 4100. If we absorb this level, watch for absorption. This is going to pop down to 4090 quicker than your head can shake. Close it, baby. Come on. XLF is down. Everything else is down. Amazon's getting crushed. NVIDIA is down 6.7. Meta is down 3.3. Tech is getting roasted. Everything on my watch list is bright red except for VIX. Beautiful. Yeah, me too, Wizard. Me too. I wish I would have held, I should say. I closed those things freaking 12 hours too soon. It's all right. I made so much money today, I don't care. Killing. Jabroni VIX. Oh, man. For sure. For sure. Can't get a feeling it could be more? It can always be more. Trust me, if I didn't scale out, today would have been a six-figure day for me. But I scaled out. It could always be more. You can't think like that, though. Is it time to full port calls at 4100? No. No. 2.3% down. 14 for 14. God. Killing it. Unbelievable. How are you going to post on Reddit with that? True. Freaking Reddit. I'm about to delete that account. I still think it's hilarious that J. Powell came out and I could tell immediately he was about to drop this thing. Like he was shaking. That paper was shaking. His attitude was different. It's like he is dreading what he's about to say. Oh yeah, his palms are sweaty. Yeah, the weak knees, vomit on his sweater already. Mom spaghetti. All those things. Nice first. Look at this. Look at this. 200%. I need to close. We're at 4,100. The only reason I'm not closing this baby is that if we absorb this 4,100 liquidity on Bookmap, we'll go to 40.90 and I'll have a 250 at least. But see, now I am so deep in the money on these things. Gamma is going to spike them, and then we'll kind of level off to the point where the delta is pretty much at 1, and then the spike will stop. Unless we just go crazy and down to like 4,050. But there's a first bounce right there. Oh yeah, there's a lot of margin call going on right now, for sure. Especially as much bullishness. This is the problem. Like as much bullishness as we've had the past 7 weeks, there are a lot of people that are still on the bull train, and they're still holding calls, longs, all that stuff. And these are the people that are getting smoked right now. And I could show you proof by the amount of cancellations I'm getting right at the moment, because people hold on and they lose their butt and they get out. It could have been. That is the third day now. The ladder's been put on, and we went down two of those times. So it varies between your account. It varies at your account. When you can no longer fulfill the capital requirements of that trade, they margin call you. It also depends on the trade too. Nice, Troy. Oh, absolutely. Plus, they have their own version of monitoring this data as well. They've got computers and, super smart people monitoring this stuff. Yeah, Goombar. That crazy rally into the day, it was quite suspicious. Nice, Florist. All right, so we're still coming on down. We still got 4,100 right here. We need this to be taken out. What's a good rule for setting daily profit targets? Make it realistic. So it all depends on what your normal profits are. If you normally profit $1,000 a day, cut that in half, and I would say $500 a day. Make it realistic and something tailored to your account. It could be based on a percentage amount. It could be based on your win rate. It could be based on your experience level. All in all, though, don't trade off your dollar amount. That's the problem. Now, if options trading is your only revenue source, which good on you, then you need a certain dollar amount you need to hit. Otherwise, this is not viable. But $20 a day, yeah, is too low for 25K. If you're producing only $20 a day from 25K, then you need to turn up the risk a little bit. It's a little too unrisky. Yeah, for sure. For sure. All right, so look at this. So an aggressive, let's say $25,000. Let's say that's your balance. Let's say 2% a week. That's aggressive, but still. Divide that by 5. That's $100 a day. So you could do something like that. You take out what you want your gain to be per week, and then you divide that into a daily rate. All right, here another low right there. If you want to make up for it, then go 4%, divide by 5, and then you have an aggressive rate where even if you miss, you're still making up on the other days. All right, here's 4101. Watch this absorption here. Watch this. Watch for absorption. If we absorb this level, we'll have like one of those 4 or 5 point whips where it just comes on down. And to bounce, there's a first test. Yeah, there's nothing right now. We blew through everything. We blew through macros. We blew through SR levels. I did, L. Martin. I did. Anything you focus on when you're in the red streak? Any adjustments you make? When I am in a red streak, the first thing I do is pull back. Position sizing, trade frequency, pull back, and then figure out what's going on. The reason why you're losing is either because 1, your system is flawed, or 2, you haven't quickly identified the conditions quickly enough. For example, the transition between bullish to consolidation, consolidation to bearish. You haven't identified the transition fast enough. That is precisely why I was playing aggressively on the big buy up, the big bull move upwards, and then about a week and a half to 2 weeks before, like kind of pretty much right when we go through 4,200, right when we went through 4,200, I started pulling back because I was anticipating the buyer's exhaustion run up into 4,300. So I pulled back, and that's why I didn't play very many trades for like 6 or 7 days, because I was like, all right, well, I'm not really sure. Is this going to go through 4,200, go to 43? Are we going to reject and go back down? I was being ready for that. So that kind of thing. I have to identify these consolidations and the transitions. So I'm impressed how you've been holding your puts through this. Thank you. I use just dynamic levels. Dynamic levels. Do you think making $50,000 from $25,000 is realistic? That's not realistic. It's possible, sure, but it's not realistic. You can't do that unless you're taking very, very large position sizing. You're talking about, 200% or 100% increase Well, if you're talking about making 50 grand, that's a 200% gain from your account. That's a 200% gain in a year, which is obviously not realistic. There you go. All right, here's another test of 4101. And there's another bounce. 4100 is gonna be tough, but look, they just added 4097. Honestly, I haven't looked at Hero in a hot minute. Let's take a look. Super positive deltas, and yet we go down. So we'll see. But yes, I'm seeing a huge spike in delta. Yeah. $405%. Nice, Raj. Awesome. We are killing it, man. I love it. We are killing it. Yeah, of course. Yeah, it always, we run in those cycles. You get the bearishness to bullishness to bearishness. We oscillate. And the problem, I don't have problems with the bull runs. Obviously, it's great. We made a killing. I have problems with people seeing what they're not, what they shouldn't be seeing, or seeing something that's not there. No, no. All right, here's another test of 4101. Why does Bookmap keep freezing? Because I keep touching it. And I have to hit the live button on it. That's why. My bad. I suck. I'm sorry. All right, here's another low. All right, 4100's breached. Does it hold? Absorb 4100. Let's go, baby. Come on. Man, where do I get 300%? Let's go. Let's go. So that was my second exit. I just posted the 34.30 second exit, but I'm still holding the runners. 34.30. Yeah. I wish I didn't close out my strangle, but dang. Oh yeah, uni pizza, baby. All right, 4125 bouncing back up again. We cannot close a candle yet under 4100. That's what we're looking for. Closing under 4100. I am hungry. Hungry. OM community crushes it on bear days. Perma bear confirmed. No, it's just we make more. You make more money on sell-off days because it's more volatile, it's more aggressive, and you've got the VIX in your favor. So you make more money on bear days. My family left to go to the theme park without me. I told them I have to stay as long as it keeps trending. There you go. Pay for that. Pay for that theme park, baby. Tell her now she can get some Dippin' Dots because you made some money. Dippin' Dots are like $7. Crazy. Get that Dippin' Dot money. That's right. My daughter loves Dippin' Dots, but they're like $58. I'm like, geez Louise. If we take out 4,100 and hold under 4,100, I'm looking at 40.90s. Oh, 100%. 100%. Well, I think the big thing there, YG, the bigger thing is the move index being down to 5%. So what does that tell me? A little more confidence in rotating into the bonds. Yields are more of a long-term play for me. Well, the wife isn't into she's not into the high-end stuff like that. She's into food. She's a foodie, so if anything, if I brought her to a seafood restaurant and let her chow down on some lobster and crab legs, she would be happy. She's not into Louis Vuitton and all that stuff. We don't have a bonds channel. No. All right, here's 40.99.75. We still can't close 4,100. Nope, I'm still in Super Econ. Still in. It'll be my third and final exit on this position when I exit. You're right. YOLO down some. But you see how much those 4160 pops, those 4160s? So I closed those for $42. We dropped from 41.15 to here, and they're now what, $65? So if you're still holding that strangle, well done. That's what I'm looking for, yeah. Still holding. So Tiger Woods is going to launch a stadium golf event. I think it's a fantastic idea. Nice, Alexander. It is Sol, for sure. Don't kill me, newbie here. What are you watching? I'm watching the S&P. So what you're seeing here on your screen, you've got SPY, you've got the NASDAQ, and you've got the VIX here at the bottom. The VIX, which is the volatility index for the S&P. What you're seeing on the left side is Bookmap, live liquidity tracker for ES, which is the S&P futures. Realistically, there has to be a limit to how much of a move we can get off today's catalysts. We are 2.3%. I don't remember any moves beyond that. No, we've had more moves. I mean, go back and look in May. We had a 4% day, a 5% day on the NASDAQ. So we can get down there. And it really gets interesting when we have two of these days in a row. So we move 6 or 7% in 2 days. That's where it gets interesting. So, oh, very cool, Alexander. Is his voice is really that like that in real life? He's like, hey, that's a really good drive. We'll go register the old SUV. Nice, John. Well done. Go get some food. All right, I'm going to give this 9 more minutes, and I'm going to get some food. I'm starving. I'll just hit a stop on the 4150 and see what happens. Bookmap is not free. This is a liquidity tracker right now. They do have multiple different holy crap, data feeds you could choose from and subscriptions. But I'll give you the link here and y'all can choose. Look at that big green candle off of that. You know what? I think this is a good time to exit. 43.90 on the 4150 puts. There's $44. I'll take 44. Let's see here. 4150. What you got? Give me it. Give me it. Give me it. 44.50 out. I'll close the rest. All right, close out the 4150s, closed out the strangles. So we're hitting the old refresh button, figure out where we're going to go from here. Nice, Jimmy, 17.99%. Well done. Good stuff. Newbie here, been watching your videos. I'm trying to train my strategies. Bought OTM puts this morning, made 350. Nicely done, Nemo. Do I think options are the best? Yes, I do. What other options have you traded? I've traded stocks, options, short positions, futures. So yeah, a whole bunch of different strategies. But in my opinion, there's not any one that I would like say this is the only thing I'm trading. I want to trade everything. I want to expose myself to the financial world. That's the only way you're going to be rich. So I trade long option. I trade long. I have a long-term account where I put stock holdings in ETFs, REITs, funds. I've got my retirement accounts, of course. I do options trading, which is what you're seeing here. So, and then of course I trade futures. If we go under 400 today, that would be that'd be like a 5% day. That'd be just about a 5% day. It happened. It happened back in May. So I think we had, what, a 21-point day on SPY? Options are the best because they pay the best relative to the move. Relative to your investment, options pay the best. Why are we talking about BBBY? All right, y'all. I am beat, so I'm going to go step away from the monitor for a little bit. I closed out the 4150 put. I closed out the strangle. 69% and 171% respectively. Let me know if you have any questions about strangles or anything else we took, or about what else we got going on here. So watch out for 4100. If you're tier 2, watch out for the next level below that. I'll see you all later this afternoon for our power hour. If things start kicking off here, obviously, just like everything, we'll sign on a little earlier. So let me know if you have any questions. If you are on the YouTube and you're new and you want to come over and join the Discord, of course, links are down in the description for the website and for the Discord. Come over and ask me questions. So, and then, of course, ask everyone else questions too. So thanks for hanging out. I will see you all this afternoon. Y'all take it easy. I'm out. See ya.